Ladies and gentlemen, good day and welcome to the Dr. Reddy's Q4FY23 earnings conference call. As a reminder, all participant lines will be in the listen-only mode. There will be an opportunity for you to ask questions after the presentation concludes. Should you need assistance during the conference, please signal an operator by pressing star then 0 on your touchtone phone. Please note that this conference is being recorded. I now hand the conference over to Ms. Richa Periwal. Thank you, and over to you, ma'am.
Thank you. A very good morning and good evening to all of you, and thank you for joining us today for the Dr. Reddy's earnings conference call for the quarter and full year ended March 31, 2023. Earlier during the day, we released our results and the same are also posted on our website. This call is being recorded and the playback and transcript shall be made available on our website soon. All the discussions and analysis of this call will be based on the IFRS consolidated financial statements. The discussion today contains certain non-GAAP financial measures. For a reconciliation of GAAP to non-GAAP measures, please refer to our press release. To discuss the business performance and outlook, we have the leadership team of Dr. Reddy's comprising Mr. G.V. Prasad, our Co-Chairman and Managing Director, Mr. Erez Israeli, our CEO, Mr. Parag Agarwal, our CFO, and the entire investor relations team. Please note that today's call is a copyrighted material of Dr. Reddy's and cannot be rebroadcasted or attributed in press or media outlet without the company's express written consent. Before I proceed with the call, I would like to remind everyone that the safe harbor contained in today's press release also pertains to this conference call. Now I hand over the call to Mr. G.V. Prasad. Over to you, sir.
Thank you very much. Good evening and good morning to all of you. Welcome to this annual earnings call. My best wishes to you. I am delighted to be here today along with the members of the executive team. As you may have seen in our published results, this year has been an outstanding year for the company, a year in which we set all-time highs in our reported sales, profits, and generated a healthy cash flow. And we continue to strengthen our core businesses while investing and building businesses of the future. Our sustained investments are being made to drive manufacturing excellence, strengthen our pipelines, and we continue to build efficiency and productivity in our R&D as well as operations, and continue to augment reaching customers by opening new markets and new channels. Looking beyond the financial performance, during the year we made great progress on multiple fronts and we were recognized for these achievements. Noteworthy among these are the recognition by CNBC TV 18 under the Master of Risk, Healthcare and Pharma segment, and we secured leadership bank scores from the CDP for the action on climate change and supplier engagement. We also featured in the Bloomberg Gender Equality Index, the S&P Global Sustainability Yearbook, the DJSI Sustainability Index in the Emerging Markets category, and were also awarded by the Economic Times as being among the best organizations for women in the year 2023. Our largest finished dosages factory was recognized by the World Economic Forum as part of its Global Lighthouse Network. These recognitions are an endorsement of our commitment to building a sustainable, high-performance organization focused on the needs of patients as well as society. I am excited about how far we have come in the past 2 years and by the opportunities we have for the future as we continue to make efforts to bring to life our credo of good health can't wait. With this, I'd like to hand over the call to Parag for taking you through the financial performance of the company.
Thank you, Prasad. Greetings to all of you, and I hope all of you are doing well. I'm delighted to take you through our results for the quarter 4 and full year of fiscal 2023. FY23 has been a year of strong financial performance with the highest ever sales, record profitability, and robust cash flow generation from operations. Let me provide you with a quick rundown of our Q4 and FY23 financials. For this section, all the amounts are translated into US dollar at a convenience translation rate of rupees 82.19, which is the rate as of 31st March 2023. Consolidated revenues for the quarter stood at rupees 6,297 crores, that is $766 million, and grew by 16% on year-on-year basis and declined by 7% on a sequential quarter basis. Year-on-year growth was driven by growth in both generics and PSAI businesses. This was further augmented with income from divestment of a few non-core brands in India. Quarter-on-quarter decline was primarily due to sales volatility in the energy business. The revenues for the financial year 2023 stood at ₹24,588 crores, that is $2.99 billion, and grew by 15%. The growth was mainly driven by new product launches, partly offset with price erosion. Consolidated gross profit margin for this quarter has been 57.2%, an increase of approximately 430 BPS over previous year and decline of 210 BPS on quarter-on-quarter basis. Year-on-year increase was driven by new product sales with higher gross margins and favorable foreign exchange. Quarter-on-quarter decline was primarily due to product mix and lower operating leverage, although partly offset by divestment income. Gross margin for the global generics and PSAI were at 61.7% and 25.2% for the quarter. Gross margin for FY23 has been 56.7%, which is an increase of 360 BPS over FY22. The increase was driven by new product sales with higher gross margin, high government incentives, and favorable foreign exchange, partly offset with the impact of price erosion. Gross margin for the global generics and PSAI were at 62.1% and 16.2% for the year. The SG&A spend for the quarter is rupees 1,799 crores, that is $219 million, and increased by 15% YOY, while it remains flat quarter-on-quarter. The year-on-year increase is largely on account of sales and marketing investments and adverse impact of forex translation. The SG&A spend for the year is rupees 6,803 crores, that is $828 million, and has grown by 10%. The SG&A cost as a percentage to sales was 27.7% and is lower by 130 basis points over previous year due to better operating leverage. The R&D spend for the quarter is rupees 537 crores, that is $65 million, and is at 8.5% of sales. Our R&D efforts are focused towards building a healthy pipeline of new products across our markets, including biosimilars. The R&D spend for FY23 is rupees 1,938 crores, that is $236 million. R&D percentage to sales for the year stood at 7.9%. The EBITDA for the quarter is 1,631 crores, that is $198 million, and the EBITDA margin is 25.9%. The EBITDA for the year is rupees 7,308 crores, that is $889 million. EBITDA margin for the year is at 29.7%, which is ahead of our aspirational target of 25%. Our profit before tax for the quarter stood at rupees 1,326 crores, that is $161 million, and that for the year stood at rupees 6,037 crores, that is $734 million. Our profit before tax for the quarter grew by 434% year-on-year, and for the year it grew by 87%. Effective tax rate has been at 27.6% for the quarter and at 25.3% for the year. The effective tax rate was lower in FY23 largely due to changes in the company's jurisdictional mix of earnings. We expect our normal ETR to be in the range of 24% to 25%. Profit after tax for the quarter stood at rupees 959 crores, that is $117 million, and that for the year stood at rupees 4,507 crores, that is $548 million. Reported EPS for the quarter is rupees 57.62, and that for the year is rupees 270.85. Operating working capital reduced by rupees 364 crores, which is $44 million, against that on December 31st, 2022, mainly supported by an improvement in receivables. Our capital investment stood at rupees 258 crores, which is $31 million in this quarter, and rupees 1,132 crores, which is $138 million during the year. The free cash flow generated during this quarter was at rupees 1,596 crores, which is $194 million. The free cash flow generated during this year was at rupees 4,009 crores, which is $488 million. Consequently, we now have a net surplus cash of rupees 5,046 crores, that is $614 million as on March 31st, 2023. Foreign currency cash flow hedges in the form of derivatives for the US dollar are approximately $774 million, largely hedged around the range of rupees 82.4 to rupees 84.5 to the dollar, ruble 7380 million at the rate of rupees 1.045 to the ruble, and Australian dollar 4.2 million at the rate of rupees 57.8 to Australian dollar, maturing in the next 12 months. With this, I now request Reddy to take you through the key business highlights.
Thank you, Parag. Good morning and good evening to everyone. As Prasad highlighted, we have delivered strong financial performance in FY23. We closed the financial year with double-digit top line and bottom line growth, with EBITDA and ROC margin exceeding the 25% levels. This impressive performance was reflected in our cash flow, and we continue to have a strong balance sheet. We progressed well on our strategic priorities and were able to invest in our organic capabilities and business development opportunities to thrive and deliver on our purpose over the long term. Let me take you through some of the key highlights of the year. One, we witnessed underlying growth momentum in FY23 across all businesses, adjusted for COVID products contribution during last year. Two, revenue in North America generics and branded markets of India and EM crossed the $1 billion mark for the second consecutive year. Three, we divested certain non-core brands in India to focus on strengthening the core. Our EBITDA is at 30% and our ROC is at 35%. We generated a strong free cash flow, leading to a net cash surplus of $614 million. We also see positive momentum on BD/M&As with the acquisition of Novartis cardiovascular brand Citrus in India, Main Pharma US generic prescription product portfolio, and Eton's branded and generic injectable products in the United States. Significant progress also made in our biosimilar businesses. We see a launch of biosimilar Stimufend, which is pegfilgrastim by Fresenius Kabi in the US. We completed and we saw the completion of clinical studies of rituximab biosimilars, and we already filed in US, Europe, and the UK MHRA. We saw the completions of phase 1 study of biosimilar tocilizumab, and global phase 3 study was initiated. Recently, we received approvals for 3 products in China, namely sevelamer, sitagliptin, and carboprost, and our partners got GA approval for nicergolide tablets. We are also progressing well in our digitalization as well as our ESG journey. Our diversified global presence, capability, and strong balance sheet make us a partner of choice. We continue to work towards strengthening our position as a partner of choice, including in Horizon 2 spaces. From Horizon 2 perspective, we signed some strategic licensing deal in FY23, including the below. With cardiac care for the wearable for atrial fibrillation treatment, with Iranica for the wearable in management of migraine, with the New Zealand-based WZTL to bring the third generation CAR-T asset for clinical trials in India, with Junshi Bioscience to bring toripalimab to India and other markets. We are investing in developing and trials of this DTX, CAR-T, biosimilar asset in keeping with our stated Horizon 2 strategy. We see them as a future growth drivers. Now let me take you through the key business highlights for the Q4 and FY23. Please note that all the reference to the numbers in these sections are in respective local currencies. Our North America generic business recorded sales of $312 million for the quarter, with a strong growth of 18% year-over-year and 17% decline on sequential basis. On a full year basis, we recorded sales of $1,268 million, with a growth of 26% over the previous year. This growth is largely led by new product launches such as lenalidomide, sorafenib tablets, and timolol gels, and growing market share in certain key existing products which more than offset increased price erosion. We launched 16 products during the quarter and overall 25 products during the year. We expect the launch momentum to further improve in FY24. Our Europe business recorded sales of 56 million euros this quarter, with a year-over-year growth of 7% and sequential quarter growth of 9%. On a full year basis, the sales of 210 million and has grown by 9%, driven by base business volume and new product launches. We launched 5 new products during the quarter and 35 for the full year in Europe across all markets. We expect this launch momentum to continue in FY24. Our emerging market business recorded sales of 1,114 crore rupees, with a year-over-year decline of 7% and sequential quarter decline of 15%. On a full year basis, emerging market sales has been roughly flat at 4,550 crore rupees. However, the sales have grown in certain percent, adjusted for the COVID-related products and the investment income in FY22. We launched 10 new products during the quarter and 94 new products during the year across various countries of the emerging markets. Within the EM segments, the Russia business in Q4 declined by 34% on a year-to-year basis and 17% on a Q basis in constant currency. In FY23, Russia business declined by 9% in constant currency. The decline is attributed to divestment of non-core brand during the previous year. During the year, there has been normalization in the channel customer stocking level after the uptick seen in Q4 FY22. We have been navigating the evolving geopolitical uncertainties and have managed the ruble currency fluctuation with effective hedging. Our India business recorded Q4 sales of 1,283 crore rupees, with a year-over-year growth of 32% and sequential increase of 14%. On a full year basis, our sales were 4,893 crore rupees, with a growth of 17%. Excluding the benefits of the divestment income and adjusted for COVID-19 related products, the year-over-year sales growth for the quarter has been 11% and for the full year has been 13%. As per our IQ, the report, we are ranked number 10 at MAT March 23 level. India remains our priority market, and we are committed to continue to grow this business at a healthy rate. Our PCI business recorded sales of $95 million, with a year-over-year decline of 4% and flat sequentially. On a full year basis, the sales were $362 million, with a decline of 12%. The decline was primarily due to high base effects of COVID-related products. We expect this business to grow during FY24. Our R&D efforts are focused on developing value-accretive products, including several generic injectable and biosimilars, where there is a patient need. We have done 195 global generic filing, including 12 ANDAs filed in the US and 130 drug master file filing globally, including 12 drug master files in the US. During FY23, and we are on track to accelerate on this in FY24. We are progressing well in development of our biosimilar products and working on some niche opportunities and Horizon 2 initiatives. Our strong balance sheet provides us financial flexibility to support future growth, invest in business development opportunities, and we will continue to maintain a disciplined approach to cash management and acquisitions. We continue to focus on optimizing workplace efficiency and productivity. We remain focused on strengthening our core generics and API business and delivering more and more strong foundation. We are building a pipeline of products to meet the evolving needs of patients and healthcare professionals through investment in internal R&D as well as strategic acquisitions. With this, I would like to open the floor for questions and answers.
Thank you very much. We will now begin the question and answer session. Anyone who wishes to ask a question may press star and 1 on their touchtone telephone. If you wish to remove yourself from the question queue, you may press star and 2. Participants are requested to use handsets while asking a question. Ladies and gentlemen, we will wait for a moment while the question queue assembles. The first question is from the line of Balaji Prasad from Barclays. Please go ahead.
Hi, this is Michaela on for Balaji. Thanks for taking our question. Just wondering if you could provide a bit more detail around your deals with Junshi, just discussing what responsibilities will look like on both ends, and just what really convinced you about their asset and its potential? Thanks.
Balaji, we were not able to hear you well. I'm afraid you will have to repeat the question.
Can you repeat, please?
Sure. Is this better? Can you hear me better now?
Yes, please.
Okay, hi. This is Michaela on for Balaji. Thank you for taking our question. We're just wondering if you could provide a bit more detail around your deal with Junshi, just discussing what responsibilities will look like on both ends, and also just wondering what convinced you about their asset and its potential. Thanks.
No, thank you. So strategically, we are looking for unmet needs, especially in India, and we believe we are in a great dialogue with the innovation industry in China, and we are trying to bring products that we believe that we can bring value, and we believe that this product shows very, very nice results and can be absolutely considered standard of care, and we can bring it to India in a very affordable prices versus the alternatives, and this is our purpose. We are trying to bring a great health in the affordable terms, and that's what was the main incentive behind this deal.
Thank you. The next question is from the line of Surya Patra from Phillip Capital. Please go ahead.
Yeah. Congratulations for the great set of numbers, sir. So my first question is on the US business front. So is it possible to share that what is the sequential growth in the US that we would have seen X of Revlimid in the current quarter?
So we cannot give guidance for products with or without, you know very well. What I can say that we are very consistent. So likely that we are going to continue to see growth in all of our spaces, including the United States, with and without the products. And it will be driven primarily for the organic activity, specifically for the United States. Beside the Revlimid, we are going to launch somewhere between 25 to 30 products, as well as the contribution of our recent acquisitions, and likely that we will see also additional activity through the year.
Sure, sir. So is it possible to give some extra color on the launch momentum that you have mentioned in your opening remark for the US market, which you believe that to be strong enough in the current financial year?
Yeah, I think that the investment in R&D and especially on products that that hopefully or likely to have less competition than the others is paying off. And as well as the type of patent cliff that we will see in FY24 as well as the years after. So right now, that's the numbers that I mentioned, 25 to 30 products. Some can be meaningful launches with lesser of a competition. And we will continue to accumulate this kind of products also in the years after. So it's absolutely our strategy in the US, and we will continue to focus on that.
Okay. Sir, my second question is on the a composite question. Let's say we are seeing a strong cash accumulation, and simultaneously we are seeing multiple M&A activities by us to improve our focus on the domestic formulation business, which is now achieved around 20% of the total revenue base. And we are mentioning that this is going to be one of the focus market for us. So could you share your thought process, the kind of capital allocation to build this business in the near future, and ultimately what is the kind of a business mix that you want to achieve it for domestic formulation, considering the potential growth and all that, if you can share?
Yes, absolutely. So in India, our primary growth will come from, one, focusing on our brands. We identified the focus therapeutic areas as well as the focus brands, and we are double down on that by increasing our footprint, by going to more cities, etc. So this is one growth. Specifically to your question, the second one is that we are collaborating with the innovation industry in the United States, in Israel, in China, and other places, as well, of course, with companies and institutes in India to bring innovation to India. We are doing it both with our own internal R&D as well as with external R&D. Some of the deals I mentioned in my script, and more to come. We are doing it both on Horizon 1 as well as Horizon 2. And our path of growth is people see us as a very attractive partner, being compliant with all the international norms, giving our reputation in the marketplace, and we are leveraging it to bring more and more innovation into India. And that's also part of the capital allocation will go to deals like this. In addition, we are always looking for opportunity also for acquisitions. There is nothing that we can report at this stage, but it is absolutely something that we are open to do all the time. For the initial part of the capital allocation, all of our spaces, including US, Europe, India, etc., our B2B business, we are looking for potential complementary deals. The type of deals that we are looking for is complementary. We are looking for products that we don't have or capabilities that we don't have. Unlikely that you are going to see mega deals or this kind of stuff. This is not our comfort zone. We are looking for primarily unmet needs or complementary products that will fit our portfolio in that way. So, yeah, please.
Yeah, sure, sir. So that is really great to know. And just lastly, any color that you can add to the peg testing expectations in the progress post-launch?
Sorry? The product, as you know, is marketed by Fresenius. So I don't have any expectation or anything like that. We, as a partner, have a certain arrangement with them, and as they will be successful, we will be successful as well.
Sure, sir. Wish you all the best. Thank you.
Thank you.
Thank you. The next question is from the line of Damayanti Kerai from HSBC. Please go ahead.
Hi, thank you for the opportunity. My first question is on the US business. You have been obviously very consistent in terms of new launches, but can you talk a bit more about the kind of price erosion which we are seeing in your existing product? And my second part of the question is compared to oral solids in injectables, what kind of price erosion you are witnessing?
Yes, so the nature of the US did not change in the last quarter. It's a similar structure of the market and similar behavior of players. Specifically for the quarter, the mix of products that we had, we saw less of the price erosion that maybe quarters before, but the fundamental structure of the market did not change. So likely that when we face competition in certain products, then we'll see an erosion. That's the nature. But specifically, we saw a better mix this time. Comparing injectables to oral solids, both are very competitive. So it's more of a function of how many players are attracting the customers, and so both injectable as well as oral solid can see a high level of erosion, but also from time to time product with less competition and therefore better pricing situation.
Sure. Thanks for that. My second question is, as you continue to invest in your business and long-term growth drivers, how do you see R&D and SG&A cost moving from here on? And you obviously have, I'll say, done better than your aspirational EBITDA margin for this year. But on a more sustained basis, how do you see this margin trajectory moving?
So we are maintaining the 25-25 as a long term, and we discussed it in previous meetings. And there will be years and quarters that we will exceed it. There will be maybe also years that it will be below, which what happened also in the past. But we are very much there. What we are doing is that we are allocating the extra results that we invest, and especially in R&D. The R&D likely to be somewhere between 8 to 9%. Also going forward, and it's naturally nominal will grow because we are growing the sales, and this is allowing us to invest in the biologics. It's allow us to invest in our products that we are partners with others, and we need to do some clinical trials, and of course, very important on the generic R&D, especially focusing on products that matters, products that are likely to have less competition.
Okay, thank you. I'll get back in with you.
Thank you. We have the next question from the line of Neha Manpuria from Bank of America. Please go ahead.
Thanks for taking my question, sir. On the ROW markets, historically, if I exclude the last year because of, COVID impact, we have grown that market north of, 20 or 25%. As we go forward, should we see the ROW market, going back to those levels of growth? And this is, excluding Russia. That's my first question. And second, on the India business, could you quantify the divestment income, in the current quarter, and excluding that, how should we look at growth? Is there more divestment that we see from the India perspective, or do you think this is the base on which we should grow? And do you think you can grow in line with the market in India?
On the ROW question. Yes, the answer is yes. We are aiming for our traditional growth, and also give or take without guidance that range of growth that we saw. And indeed, when you are taking out all the one-offs and the fluctuation of currency, we are growing very, very nicely. This is primarily as we are accelerating the the development and the filings of products in all these markets, and also focusing on our footprint, especially on the hospital business. So yes, the answer is that we will see a growth, and in some of those markets even accelerated growth versus the past. As for India, the divestment was 264 crores, and that's the value we got. And specifically, we see more, from time to time, but nothing significant that we are going. And what we also very busy with is actually to bring more and more products, and we are enhancing the collaboration discussions and the BD deals that will be for India. So it's a kind of organic plus inorganic, but most of the inorganic will come from collaboration rather than kind of M&A acquisitions of other companies.
And, just to extend the India question, do you think we can grow in line with the market, keeping aside the collaborations, et cetera, because, that would take time to reflect in numbers just from the effort that we've been putting in the business over the last few years? Could we see Reddy's go back to, or at least try to get in line with IPM growth?
We believe that we should be better than the IPM growth.
In FY24 itself?
In FY24 and after.
Understood. And one last question, if I may. On the Russia business, I didn't quite catch, what you mentioned, in the quarter. Was there any specific impact, from channel inventory being cleared in the quarter? I was not sure what you mentioned.
No, it is this is possible.
So, Neha, the impact is actually in the base. If you remember when the conflict started, at that time we had said that, there was upstocking. And to that extent, in Q4, same time last year, the base was high. And that's impacting the year-on-year growth.
Okay, there's nothing specifically in this quarter.
Yeah, so nothing specific happened in this quarter. And most of the sequential decline stuff is primarily timing of product. There is a specific timing of tenders of the biologic products and stuff like that. So we can say that in Russia it's business as usual.
Got it. Thank you so much.
Thank you. The next question is from the line of Ankush Mahajan from Axis Securities. Please go ahead.
Thanks for the opportunity, sir. So my question is related to the G Revlimid that has added the incremental revenue for US business. So could you throw some light on it? What is the sustainability run rate for this molecule in upcoming quarters? And excluding the G Revlimid, how do you see the EBITDA margins for the US business?
So on the product itself, which is going to continue to be a meaningful product from us, may fluctuate from quarter to quarter, but it is going to be there probably for the entire agreement timelines. The fluctuation is primarily patterns of ordering, but as you know, it's a limited volume arrangement, and we believe that it will serve us well to the entirety of the agreement. As for the activities outside of it, it's going to continue to grow. I mentioned just in previous discussions, all the time we have products that have less competition than others. Naturally, this product is bigger than the others, but likely that also in the future we are going to see products like that, and that's what we are also focusing on. And so the profitability as well as the growth of our US markets will continue to be in the same range also in the years to come and quarters to come.
And so what are the EBITDA margins sustainable EBITDA margins?
Like I mentioned, we are going to sustain the 25-25 on the long-term basis. We are not guiding for EBITDA per market, as you know. And from time to time will be more than that, and there will be maybe times above it. It's also a function of how much we want to put into the R&D. Likely that they will be higher through the time that we will have Revelamed and the combination of other low competition products.
Sir, if I do my calculations and excluding the Revelamed, base business is still on the lower side in terms of the growth. So any strategy for the base business?
I don't share that observation.
Thank you, sir. Thanks very much.
Thank you. The next question is from the line of Kunal Dhamesha from Macquarie. Please go ahead.
Yeah, thank you for taking my question. So the first question on our strategy to leverage our US generic portfolio for Europe and other markets. And we have seen significant growth in Europe geography over the last 2-3 years. But in your view, how far along we are in that journey? Let's say in US we have roughly around 140-150 products. How many products we would have already launched in Europe? How many in pipeline? And if you can throw some light there, would be helpful.
Yeah, we decided to focus on Europe when we took the decision on the diversification. This is working well for us. And in terms of where are we in the journey, somewhere in the beginning. So I do see that most of the growth in Europe are ahead of us. We are planning to launch many products in Europe in the next coming years, as well as to make other moves, including inorganic. So we see Europe as a focus market, especially around Germany. So Germany will be the focal market, and of course, the rest of the big countries in Europe, we believe that we have to offer, including biosimilar. So likely that you'll continue to see growth in Europe also in the next coming years, including next year.
And this leveraging of portfolio, when you launch same product, does it kind of become highly ROIC accretive in your view, even beyond what our aspirational target is, or it helps us achieve that 25% ROIC target on a portfolio level, not on a product?
Yes, absolutely. It is because it's primarily leverage. So that's and obviously it's a piece in the puzzle. Europe is still relatively small compared to the other spaces, but over the time it's getting more and more positive impact on the overall average. But it's a thing.
Sure. And the second question on the CTO1 observation, what's the kind of nature of observation? And have we submitted the response to US FDA, or are we in the process of submitting a response?
Yeah, it's a minor observation. We will address it, and we did not submit it yet. We just got it. I think we have 15 days, if I'm not mistaken. So we will submit it on time. I believe that this will be okay.
Sure. Thank you, and all the best.
Thank you.
Thank you. The next question is from the line of Madhav Marda from FIL Industries. Please go ahead.
Hi, good evening. Thank you so much for your time. Just had one question. Basically, we've accumulated a lot of free cash flow in recent times, and I think have been doing some M&A activity already. Just wanted to understand, given, I think in general, a lot of the peers have good free cash flows and net cash balance sheets in the industry. So when we're looking at M&A, aren't good assets very aggressively bid? We've seen as well in the industry. So just want to understand that for a good asset, is it easy to get it at a good IRR, or how should we think about M&A opportunities given we have a good cash pile available today?
Yeah, so if you recall, it was part of our strategy to close the debt and accumulate cash, anticipating this situation, anticipating at the time the increase in the interest rate and the inflation. So we are now looking for opportunities that one will of course fit us strategically, and second will be a good valuation. So now I think there are certain areas and certain type of products that potentially can get a good multiples, and that's what we are looking for. In addition to that, we are looking for, we are using that money for the type of licensing in and type of boosting the portfolio also for the future. And the money will be used also for that. We are not the type of company that is seeking what we call transformational acquisitions. That unlikely that you'll see in our case. But we will see hopefully more deals than we saw in the past.
So basically, our M&A will be more bolt-ons, the kind that we've done in recent times as well. That's the idea.
Let's call it business development, which is including licensing and will including product acquisitions, collaboration with companies, and also M&A.
Got it. Okay, thank you.
Thank you. The next question is from the line of Cinderella Thomas Carvalho from JM Financial. Please go ahead. Ms. Carvalho, the line for you.
Thanks for the opportunity. Am I audible?
Yes, you are audible. Please go ahead.
So just wanted to clarify this on, sorry for asking on generic Revlimid again, but is the higher volume share reflected in this quarter or will it be reflected next quarter?
If you are talking about the linaclotide, we cannot share in quantity numbers. What I said is it's continued to be meaningful for us, and in accordance to the agreement terms that we have.
Okay, thank you. And in your opening remarks, you highlighted about the Chinese product approvals that you have received. When and where should we start reflecting these into earnings, and what is our outlook here? If you can help us understand.
Yes, this is a reflection of the efforts that we had through the years by submitting all the products in China, focusing on those products that we can get GA status and be one of the early entry for the market. So I think getting 4 approvals in less than a couple of weeks is a big achievement for a company like us. What we see pick up all the time as a significant impact on our results. We will see them more about, let's say, from starting in FY24, but more likely we'll see bigger numbers in 25 and 26 fiscal as the submissions and the approvals and the timing of those GOPs will take place. That's what we anticipate. And right now we are in the pace of 50 to 20 product submissions per year, and naturally with the cycle of approvals, the patents in China, and the timing of these GOPs, it will be more meaningful. But let's say the strategy so far is working well because it's a leverage strategy in which we have an outlet for the very, very important markets. We are very pleased from this approvals.
Thanks. This is helpful. And coming to the PSAI business, compared to your peers, we have not seen the top line growth. However, the gross margins have definitely improved Q on Q. So how should we see the outlook for this business? We've been positive on growing this business, but does anything change here at this point in time, or is it some seasonal impact that we have seen in this quarter and we should start seeing growth from next fiscal onwards? Like, how should we read this?
We will see both. We will see growth and we will see improvement of profitability. For us, this market also in the past, and excluding also in this segment we used to record also COVID sales. So if I'm excluding the COVID, What we saw is at the time it was a decrease in prices of some old portfolio as well as increase in some of the raw material. Now we see the reverse. What we see that we are launching new products and most of the sales are to more territories, especially in Asia. And we see also a better mix of products, and we see an ease on the supply chain and to a certain extent procurement. So actually now I see a positive momentum that is building on both growth as well as profitability.
But we should see this gross margin level sustaining. That's the.
I hope that it will be even enhanced, not just sustain for sure, but we are aiming for enhancement.
And the top line, any number that you would like to share, like early double digits, mid double digits, anything, any color which will be helpful?
No, we are aiming for double digits. We are not guiding, but we are aiming in double digits for all of our markets, including our PCI.
Thank you so much. I'll join back with you.
Thank you. The next question is from the line of Tushar Manudhane from Motilal Oswal Financial Services. Please go ahead.
Yeah, thanks for the opportunity. So again on North America sales, given that FY23 had certain strength-related exclusivity as well for generic Revlimid and competition to some extent kicking in the coming quarters. So considering these aspects, just would like to understand, would we still grow in FY24 in US sales? North America sales?
I believe that we will grow not just because of the product. We will grow because we are also launching 25 to 30 products, and the combination of all that mix should grow us in the United States.
Okay, sir. Thank you.
Thank you. The next question is from the line of Ashish S. Thavkar from IIFL Asset Management. Please go ahead.
Yeah, thanks for the opportunity. So I had this question since we have been maintaining this 25% EBITDA margin guidance. But if you just try to strip off some one-time big opportunities and say some one-off non-recurring items, the EBITDA margins on the core business seem to be lower versus what we were earlier guiding for. So if you could help us understand, for FY24, as we go into FY24, would you like to provide some color as to directionally of what we as investors can expect?
Yeah, first, I don't share the observation that it's less than what we guide, so that's a starting point, and we may need to clarify it. I'm maintaining the 25-25 message on the long-term basis, in which we will allow us both to grow, give great return on the shareholders, as well as to finance the future. And what you see is that we are building a bigger and better portfolio as time goes by. And plus, the balance sheet is probably the best ever in terms of both cash flow as well as no additional substantial risk that exists in the balance sheet. So this is, of course, allowing us and much better also utilization of the working capital. So this will allow us better ROC also in the future.
Yeah, fair enough. So lastly on this India business, you did mention that FY24 you expect to beat the IPM growth, and we have been acquiring assets, trying to strengthen our portfolio. What gives you the confidence that FY24 we can beat the industry growth? So just wanted to have some understanding on that.
I'm confident that we'll do it, and we need to recall that for me, I know that we are looking at external sources like IQVIA, etc. But the most important for me is what is our bottom line growth, and that should be very healthy. So the answer is that I am confident, and I believe that we will grow the bottom line even faster than we grow the top line.
Okay, fair enough. Thanks. All the best.
Thank you. The next question is from the line of Nitin Agarwal from DAM Capital Advisors. Please go ahead.
Thanks for taking the question. It is on the main portfolio that we acquired in the US. Can you give us some more color on what opportunities do you see in that portfolio in terms of to grow the portfolio from the current size?
Yes, it's a portfolio that has certain level of lower level of competition, especially in women health. It allows us to get back to normal, something that was missing for us, as you know, through the years. And it's also there were many products in the pipeline that Maine did not launch, and something that we'll be able to do in the future. So if you wish, we have a triple impact. One, we believe that we can do well with this product. Second, we will be able to launch more products. And third, we can launch some of these products in other markets. And relatively, the economy of the deal is relatively attractive for us. So we are very pleased so far with the progress of the main acquisition.
Right. So I think it's fair to assume, given the new product launches that you have, opportunities that you have, we see possibilities for growing the business from where we acquired it.
That's what we are aiming to, yeah.
And from a profitability perspective, is it a business which is higher than our corporate profitability right now?
It is. I cannot share information about the specific profitability of products, but we believe that the nature of the products and the mix of the products that have less competition is always favorable versus those with a high level of competition. This is the nature of the US market.
And besides this acquisition that you made for this investment that you made in the US generics, do we still are open to keep investing more money in US generics by way of acquisition, or this is more of one of a special case transaction which came our way?
We will continue to look for opportunities in the US market, including generics, if it will fit to the financials and if it will be complementary to what we do. So we will continue to look for opportunities, both organic and inorganic, in the US, not just now, also in the future. It is a very important market for us.
Okay, thank you.
Thank you. The next question is from the line of Prakash Agarwal from Axis Capital. Please go ahead.
Yeah, hi, good evening. Thanks for the opportunity. Just if I heard that right, just wanted to reconfirm that you mentioned that you expect double-digit growth from across markets, including the US. Would that be correct?
I do, not necessarily every quarter and not necessarily all the time, but absolutely this is the long-term aspiration for us, including in the absolutely that's what we are aiming also in the short term, but I cannot promise you that it will happen every quarter and every product on every situation, obviously.
So asking for fiscal 24 specifically, sir?
Specifically, that's what we are aiming. We are aiming for double-digit growth.
And with excluding the acquisition with the base portfolio and some one-offs, it is possible as what you see?
I believe that it's possible.
Okay. That is helpful. And just a follow-up on this, the US generic market. I mean, many companies have been talking about while price erosion remains more or less similar, there is a lot of volume opportunities that is coming, new business opportunities, etc. So would you say that we would have also got these in the last 3-6 months, given there are some US FDA issues with the peer set?
I'm not sure I understand the FDA comment. Can you clarify that?
Yeah, so what we hear from some of the peers is that they are getting some volume opportunities like new business opportunities, NBOs, where they need to supply a few of the products where earlier they were not contracted, largely due to the US FDA issues by the peers. So are we getting some volume-based opportunities to supply in the US market?
We do from time to time. I'm not considering it as a strategic issue, but we do from time to time have a situation. So give or take, if I saw correctly, about 10 to 15% of the SKU in the United States in some sort of a shortage from all kinds of reasons, not just FDA, but all kinds of reasons. And in those situations, you are always an opportunity for one-time buy and stuff like that.
And would you have you seen anything incremental in the last quarter? Is what I'm trying to get some color on. I mean, given we have seen some large companies having some.
Yeah, so nothing that I see as strategic.
Okay. And
in general, we are not building ourselves on failures of others. We are trying to build ourselves with our own capabilities.
Fair enough. And lastly, on the run rate that we see in the past, it was 225 million, and then it came back the base business side 250, and then we saw some big jumps. And now things are normalizing, and you still maintain it is going to be volatile but material. And I also understand that market share of these Revlimid are, it changes, right? It increases every 6-12 months or maybe calendar year. So would it be fair to say that, with the new launches that you spoke about and Revlimid continuing, and this is, an addition to the first question, so that is the key to grow double digit. Would that be a fair assessment that on that Revlimid base also you will grow?
The growth in the United States will be from new products as well as volume from other products, as well as better costing. All of that will contribute, absolutely. But I cannot guide you on with and without or this kind of stuff. I will not be able to do that.
Okay, lovely. And lastly, while you spoke about growth across markets, would you say that this kind of launch and product visibility across markets, these kind of margins could be sustainable?
Yes, I believe so. I believe that's why we are guiding for the 25-25, which will enable us even to finance Horizon 2. So if you recall, we said that about 50 to 100 basis points on Horizon 2, and we are able to cater that within the margin. So we are strategically positioned well that we are able to finance our future and at the same time to provide these margins and ROC to the shareholders.
No, but we are doing better than what we are guiding, right? I mean, that's what I'm asking. Will we be able to continue with this kind of performance?
Now we are doing better, and maybe there will be also a period of time that will be not better. But right now we are doing better, yes.
Okay, lovely. Thank you and all the best.
Thank you.
Thank you. We will take that as our last question for today, ladies and gentlemen. I would now like to hand the conference over to Ms. Richa Periwal for closing comments. Over to you, ma'am.
Thank you. Thank you everyone for joining us today for the earnings call. For any further queries, please reach out to the investor relations team. Thank you. Have a great day.
Thank you. On behalf of Dr. Reddy's Laboratories Limited, that concludes this conference. Thank you for joining us, and you may now disconnect your lines.